we're looking at June 2024, question number 1. VeriWell Sdn Bhd. So you got VSB distributed, Mr. Wong. So you got two sets of information. You got work carried out. So the information stays here. Work to be carried out. We read the basic instructions here. Basic instructions. Okay, we get the basic instructions. Okay, you should assume today is 3rd June. Your tax associate of a tax firm. Yesterday, your tax partner held a meeting with Muthu, Chief Executive Officer of Client, VeriWell Sdn Bhd. VSB has been producing a range of health supplements made from linseed mushrooms in Malaysia since 2000. Okay, they're long enough in Malaysia, more than 24 years. In 2020, Multiply Sdn Bhd acquired 40% of VSB. Since then, VSB has expanded its production. Okay, so M acquired 40%, MSB acquired 40% of VSB. VSB has expanded its production. VSB has applied for public listing on Bursa in 2 years' time to raise 200 million, after which Multiply will dispose its shares in the listed company in the open market to realize its gain. During the meeting, Muthu explained VSB has recently started to export its products to neighboring countries. So export basically tells you got those export incentives running in your head already, and it comes from the incentive chapter. During the meeting, Muthu explained that VSB has recently started to export its product to its neighboring country. Muthu requested a report which covers the following. VSB, in respect of tax incentive, it potentially qualify for. Multiply in respect of the gains derived from sale of its share in VSB. Direct sales distributor in respect of commission they receive from VSB, and the expenses and commission to their sub-agents. This is the new withholding tax for agents. Then you got the following exhibits: notes, sample statement, email from tax partner. Okay, right. You can look at just have a rough look at the note first. Right, you got about 8 set of notes to deal with. Okay, 8 sets of notes to deal with. Then you have a bit of numbers here. Okay, what are numbers here? Just look at the numbers first. Get a hang of what are the numbers. You got commission, rental income, and then you got some expenditures for tax, sub-agents, daughter school fee, car expense. It looks like a bit of a planning of job in terms of salary, okay, donations and so forth. Okay, fine. Then you got work to be carried out. This is the big one we're going to open up here. We're going to open up the word processor. One side, we'll just put this one beside here. This one a bit more smaller one here. Make it a bit bigger. Okay, so I can put this here, put this side by side. We'll start running the idea. Okay, please prepare a report. Okay, fine. Report. We start with report. Right, then you got your table. Tax firm from to here's going to be Muthu. VeriWell. Date 3rd June 25. This is 2024. Okay, done. This report addresses the tax issues that you have inquired about. Okay, now we can then break down. We got all the parts that we have to break down. Okay, in respect of potential tax incentive available, I've already determined that the full amount of expenditure incurred for 30th April 2023 and 2024 qualify for purpose of promotion of export, incentive, and allowance for increased export. So, given the value add is 35%. So here they ask you for eligibility for tax incentive. Here you got POE, AIE. Okay, the next one you got is mechanism calculations. Then you got B is going to be disposal of investment. Explain possible arguments for gains arising from investment being treated as capital and revenue. Draw reason conclusion. Okay, capital, revenue, conclusion. Okay, let's get that settled out. Then you got C1. Explain the law relating to withholding tax payment to commission resident. Explain why withholding provisions are applicable to VSB and state VSB responsibility in withholding tax when it pays commission. Okay, so law relating to tax. Withholding tax applicable to VSB and VSB responsibilities for withholding tax. Then you got C2. Using illustrative distribution of Mr. Wong, compute his total income. You should indicate 0. So spreadsheet. Export revenue. Explain by reference to tax treatment expert whether the suggestion is better from taxpayer to keep VSB export revenue outside in Malaysia through. Okay, that one just export revenue holding location. That looks like some kind of ethical problem there. Okay, inflated revenue to augment track record for listing. Okay, this explain ethical implications that suggests of the suggestion to Muthu that VSB should inflate its revenue to pay income tax on inflated revenue. Right, there's 5 marks for this part. Is it worthwhile to do some kind of manipulation? Okay, we can look at that one later on, but that's about this one. Okay, then down here you're going to put down one sentence here. Okay, we're done with this part. Okay, we've done the organization already, and you already know all the questions that you need to look at. Okay, now we quickly jump into the notes, and the notes is where you're going to start looking at doing the question as soon as you trigger the ideas. Okay, right. VSB company incorporated and resident in Malaysia. Okay, it's resident in Malaysia. VSB has an ordinary share of ordinary paid up capital of 9. Closest accounts on this date. So I do want to highlight this one. Important thing here. Okay, it's resident, incorporated, and resident. Those are important words. Okay, it's a manufacturer. Okay, this is an important word. Okay, right. VSB ordinary paid up share capital is 9.5 million, held by Multiply, and 60% held equally by 2 founder shareholders. both citizens of Malaysia. Okay, important words for this AIE. Okay, multiply principal activity is investment holding. Okay, it comprises dividends and interest. In the past 10 years, in addition to investment holding, Multiply has invested separately to also invested separately to two single standalone group companies with growth potential, helping to expand operation overseas, and then sold the equity stake. Multiply similarly intends to help VSB expand and improve and will dispose of its stake after listing. Well, I think I got enough information to handle this one, the discussion whether it's a capital or not. Okay, their disposal argument why it's capital. Okay, the MSB or Multiply Berhad be an investment holding company. Okay, acquisition of shares would meet this requirement of capital investing. Okay, helping operations of VSB is in line with investment growth strategy. So that they can take out more dividends. Okay. The disposal shares are more likely to be capital nature rather than transaction. Okay, then we got the revenue argument. There is two more previous incident that have similar pattern, indicating the frequency of doing this action is higher. Okay. Next is MSB did not stay as a passive investor, but rather as a active investor who increased the value of their companies purchased. Export strategies. The intention to make profit this activity as a revenue in nature. Okay, this is capital, revenue, argument. In terms of conclusion, the basis of involvement indicates that they buy it, then improve it, and finally realize the sales potential by selling the shares once listed. This appears to be revenue in nature and should be subject to income tax basis period when gains are made. Okay, that is the analysis there. Okay, we're done with the analysis part. So this one, which chapter is this? Okay, in terms of chapter, you're looking at the this one, badges of trade. What are they doing? So your answer comes from this part, you're okay. Okay, that's this part here, done. Okay, let's go to the next part. VeriWell products are sold through direct selling. Okay, VSB has 1,000 registered distributors in Malaysia. They are all individuals who are resident in Malaysia, right? Distributors. Okay. Under the direct selling model, VSB pays commission to its distributors, who in turn maintain their own network of selling agents. Distributor incur expense in running their distributing agencies and pay commission to their sub-agents. Muthu wants to ensure that VSB and its distributors are fully compliant with their respective tax responsibility. Okay, that's about it. Number 5 is just one question. It's about this transaction here. So how do you deal with this part? Okay, in this part, we're talking about the treatment of the distributor. So, the law. That 1967. Under section 107D, requires a company that makes payment to resident individuals, being agent, dealer, or distributor. This is called ADD, from sale the payer shall deduct 2% of gross payment source and pay to DGIR within to pay to DGIR no later than the end of the following calendar month after payment. Okay, that's the first part. Now, VSB is paying sales commissions to its distributors who are resident individuals. The law applies to them. Okay, that's it. Right, next one. VSB responsibility here. What's the responsibility? VSB has to deduct 2% sales commission if the distributor concerned has received more than RM 100,000 from VSB in preceding year of assessment. VSB will need to hold over and pay tax withheld no later than the end of the following calendar month. Okay, that's basically VSB responsibilities. So it's actually theory, it's memory work. The only applications that, yeah, it's a distributor, they paid it, that's it, nothing more than that. Okay, you don't need to do too much, but it's more of the memory work of what is it that it is and when you have to pay this. So this is that rule relating to ADD. So remember, this ADD is the one that you're looking at. Okay, that's the one that you should be aware of. Okay, now let's move on to the next part. VSB has incurred expense.
Hi, sir. Sorry,
Yes, go on.
I have a headache. I think I will have to
Okay, no worries.
leave this class early.
Okay.
Sorry, yeah, sir. Thank you.
Right. VSB has incurred expenses of 1 million in the year ended 30th April. Okay, 30th April. And you got 2 million in the year ended 30th April 2024, actively promoting its range of product in neighboring countries. Okay, started exporting VeriWell products to these countries from May 2024. Export revenue for financial year end is expected to be 10 million, increasing 30% annually. So now we're coming to the next part. Okay, we're looking at the export revenue part. Okay, so they have about incurred expense of 1 million and 2 million for these 2 years, promoting in neighboring countries, exporting to these countries. Export revenue in 30 expected to be 10 million, increasing 30% annually. Value added is 35%. Okay, VSB Muthu has heard that in order to avoid being subject to Malaysian tax on VSB export revenue, it's better to keep export revenue outside Malaysia and not remit any to Malaysia. He believes this will reduce tax exposure. Right, let's be clear about this one. Hold on. You do need to, before I go there, VSB distributor. All right, he's got a commission from VSB 205,000 rental income, and he's got a income. So this is one of the agents. Okay, that's a sample calculation. Did they ask you to do anything here? Let's check the requirements. Number 2, illustrative calculation for Mr. Wong. Refer to spreadsheet. So we can handle this one for Mr. Wong. So we handle the exhibit for Mr. Wong. Exhibit for Mr. Wong basically says that you have to do some calculations here. That's why you have to trigger spreadsheet already. Computation for Mr. Wong. Okay, let's look at the computation for Mr. Wong. Business income, you got commission. Then you got your 205,000. Okay, you got 205,000. And then rental income is a different income. Okay, then you got commission to sub-agent. So these are all the related costs that you're supposed to be available to deduct. Sub-agent. $37,200. $37,200. Then you got less. You got car expenses. That's 13,800. Right, then you got your statutory business income. Then you have your rental income. And then you got rental property mortgage quick rent assessment. Okay, so you got rental costs, zero here. Aggregate income, like a donations, donation of VeriWell products. Right. The daughter's expense cannot be deducted. Donation cannot be claimed since it is benefit in kind, not cash. Okay, that's one of the things you should be aware of. And the other thing you can write down is daughter school fee is not deductible. Okay, done. That is about the expenses that you have for this guy. You're done with this one. Okay, refer to exhibit. Okay, next one, the export holding thing. Is it a good idea or a bad idea? Well, the export holding thing is definitely not a good idea. Let's handle this one. There is no tax benefit for holding the sales income overseas because the gross income is still captured in the tax computation. This is because the manufacturing is done in Malaysia. Income is derived. When it is sold. Export revenue will be taxable in Malaysia, respective whether it is remitted or not. Okay, that's basically the export revenue part. Right, we have to do some calculations here. Okay, we have to do some calculations here. Full amount of expenditure. Let's do part A out. But let's see the idea of the last one first. Okay, the last one. The last one here refer to the idea of this one is done. Let's look at the second last one. The idea of, yeah, you got the sales here. Okay, you got sales here, and you also got some numbers here. Okay. In respect of tax incentive, I already determined full amount of expenditure incurred 30th April are all qualifying expenses for promotion and export. Allowance for increased export rates 10%, given the value add is 35%. I already give you this. So what do they want? Explain by reference to required condition why ASB is likely to be eligible for both. 6 marks. So here is more about this concept of let's look at this part, eligibility part. Eligibility part is about memory work. Okay, your memory must trigger here. So let's go for the first part, POE. VSB qualify for POE because Malaysian tax resident company incurred qualifying expenses of, well, how much did they spend? Well, they said they spent 1 million and 2 million. 1 million in and RM 2 million 2024. Promoting overseas. Okay, next one. Products promoted are produced in Malaysia. Okay, so those are things for this part. Next one, AIE. We qualify for AIE because is a Malaysian incorporated and resident company. Okay, next thing, the next important one here is at least 60% of share capital is owned by Malaysian citizen. the individuals. Okay, next part. Manufactured goods. Exported. Next part. Product exported is health supplements, which are not in the negative list. Okay, and it started export May 2024 and expect year on year increase of, well, they already said here, year on year increase of how much? 30%. Right? Achieve the target value add. Okay, there's a value add target. Now we go to the calculations that you can go for. Okay, this calculation, we go again, same thing, POE, AIE. So, the amount spent will be eligible for double deduction. This means YA 2023 deduction is RM 1 million times 2 and YA 2024 deduction is RM 2 million times 2 . Okay, that's basically the first part. This is deducted before arriving at adjusted income. Right, that's the next one is AIE. The increase in export times 10% would be eligible allowance that can be absorbed against 70% of statutory income unutilized. So you don't use anything, unutilized amount can be carried forward indefinitely. Okay, computation in spreadsheet. So you do want to think about how much you're going to claim for this part. Okay, we look at the amount you're going to claim here. So you got here, they already told you you should assume statutory income for 2026 is 400,000. So you got statutory income. export in, well, the export in 2025 was supposed to be 10 million. That's your okay, you got about 3 million. So you got 300,000, okay. Okay, that's going to be the number that you can get. Okay, 120,000, done. Okay. Done with that part. Okay. We go to the last part here. So we're done with these two parts already. Right, last one. Muthu understands corporate friends. VSB should register sufficient incremental revenue in its track record to comply with Bursa listing requirement. He indicated that VSB is prepared to pay additional income tax if VSB inflates the gross revenue figure to satisfy the track record requirement. Since there will be a tax overcharge rather than a tax undercharge, Muthu asked tax firm to confirm that VSB will not be committing any tax offences. Okay, so here the whole idea is whether you can inflate your figures of revenue, achieve the KLST listing requirement, appears to be breach of integrity. Okay, the production of fraudulent profit statements would be illegal and breach of professional behavior requirements. Paying more tax does not avoid the fact that stakeholders who rely on the accounts will be deceived. As professionals, we have to discourage any acts of manipulation that would breach public interests. If you plan to move forward with this arrangement, we would have to decline acting as your tax agents and advisors, since it would breach our ethical requirements. Okay, that would be sufficient. Then you can say end of report. Okay, that covers this part here, and done with this question here. That covers this whole question out.